So you want to react first? Yeah. It's good to have you on. I'm glad you popped on with us. You want to just react to these Daly headlines, Mary Daly? At or close to neutral requires a step down into smaller increments of hikes?
I mean, I think it's worth pointing out, Scott, that Daly is one of the more dovish members of the Federal Market Committee. And let's not have a memory that's shorter than 24 hours. And I believe we were on this show yesterday when Patrick Harker from Philadelphia made some hawkish comments, and he was going the other way on this, and the market went the other way. And so there is a diversity of opinion out there. I don't think what Daly's saying is really that far out of bounds of what the market was priced in. I will say at the moment, you've had the peak funds rate come off, Scott. You were up near 5, now you're 487, so a 13 basis point decline. What this is doing is introducing doubt on the far end of what the Fed's going to do. She's still citing the 4.5% funds rate, which is part of the summary of economic projections from the Fed. The question is what happens beyond that. I think one of your panelists was just talking about that, Scott, that we're still got a 75 in front of us and a 50, say, at the end of the year, which is pretty much where the market was, with the debate being where's the pause and where do you go from here. I always had questions about how far the Fed would go before it started to either ratchet down or even stop and pause. But I don't think this is a dramatic change in the outlook for the Federal Reserve. You should have been thinking about this already, but they are still, I think, headed for that 4.5% range.
But I mean, you know, what we got in Fed funds 5% even yesterday. I believe it was from May of 23, right? So the market had moved pretty aggressively to where it thought that was going to go. Yeah. And we had kind of conditioned ourselves for 75 in November and then maybe another 75 in December. The Journal story today, I want your opinion of that, too. It's not an accident that that story is out today, I don't think. And it's the idea of, you know, conditioning people for what's coming. And I think the most interesting part of that, according to Tim Rose, who wrote the piece, is preparing investors for a decision in the weeks after the November meeting, as he says, without prompting another sustained rally, right? The Fed wants to be able to communicate their strategy without sending stocks surging because it defeats the purpose of ultimately what they're trying to do.
Yeah, I think that's right, Scott. I think that the 75 being built in, that's what we know that's in front of us. I didn't think that part of the story was news, and the question becomes after that, and it's going to depend on the data. If we get a little cooperation from inflation and the Fed feels like it can ease off the 75s. Remember, we're talking about easing off rate hikes. We're not talking about even pausing at this point. You're right. I mean, we are down. We were up at 503 on the April contract. Which was it, April or May? Yeah, it's the May contract. You're absolutely right, Scott. And now we're down near 388 today. So that's 13 basis points. What that tells you is there's a swing factor on that last quarter point, but it still tells you you're going pretty high. I don't know how much. I think it was Karen talking earlier. You want to sell the house, bet the farm on stocks at this moment because of that particular change.
But also the idea, though, that, you know, and we put this forth, while investors are held hostage in some respects, Steve, by this move in rates, the Fed is too. It can't let part of the rate picture get out of control. That's the Nat Alliance idea today. They say, quote, as I read earlier, we think we were on the verge of a taper tantrum. Maybe we had it from 410 to 434, too far, too fast. You have Siegel worried about, you know, the lack of liquidity and volatility in the bond market. He's far from the only one. They must be thinking about these issues.
They are, Scott, but I'm sorry, I just can't come on air here and say the Fed is going to pivot because of comments from Daly. And I'll remind you again, we had comments that were not directly opposed yesterday from Harker, who is, Harker, I think, more in the middle, more in the center of where the Fed is right now. I can't read the Journal story, these comments from Daly, and say the Fed is backing off on heading eventually to 4.5%. I don't think the Fed wants you to think that. I think you can think about, does the Fed really have to go to 5? I just don't think. Remember, Scott, didn't we have Siegel on? I asked him, I said, well, what do you want the Fed to do? He said, Did he say like 75 and another 50? So he's not even that far from the Fed. He's your dovish guy.